So today I want to talk about overdraft fees and the ways in which banks use them to take advantage of poor people. If you're not familiar with what an overdraft fee is, it is essentially a fee charged by banks whenever a bank account dips below $0. Now, this is done theoretically as a protection, so that if you are making a purchase and your bank account dips below $0, the bank will take this fee in exchange for allowing the purchase to go through. Given that we are dealing with bank accounts that are nearing $0 in this situation, it is not difficult to see why this disproportionately affects poor people rather than people who might have more of a buffer or maybe some more wealth in their bank accounts. So, right off the bat, we could see that this fee specifically targets people who make mistakes who are poor. So, given that, what's a type of situation one might find themselves in where this will happen? Well, if you're someone living paycheck to paycheck, or you're someone who's waiting for your next month's benefits to kick in, and you're near the end of the month, you might find yourself in a place where, if you do have a bank account, it is nearing $0. So when you make an essential purchase, either on food or bills or any other number of reasons why one might make a purchase, the bank account can, at least temporarily, dip below $0. And this bank will, claim that it's offering a protection by extending a loan. Now, when the bank account goes below $0, say you overdraw your account by $5. The bank offers you a $5 loan and puts you at negative $5 within the bank's credit. Now, the issue is they then charge you a $35 fee on top of that. And doing the math behind that, a $5 overdraft ends up leading to a 700% interest loan because you're then paying 7 times as much in addition to the original principal to pay back that loan. And given that it is often static and $35 pretty much across the board in all banks, this further makes it difficult for poor people to be able to deal with this situation. If it was based on a percentage, like maybe you went $1 over and you got charged maybe a 10% rate and it was 10 cents off of $1, one could theoretically say that's reasonable. But the idea that it is a $35 flat fee, that if it's $1 over, would literally be a 3,500% markup, is an absolutely ridiculous interest rate for anything across the board. And the idea that it would be the more that you overdraft, the less that the interest rate is, implies that it is not really trying to incentivize poor people at all. There's just a major issue in the way that this is set up and designed. So I want to go over some of the statistics and data involving overdraft fees and kind of highlight this issue, as well as talk about some alternatives that people have used, some solutions, and maybe some alternative plans that we could think about as a society moving forward. So with that said, there is a reality where, unfortunately, the immense problem of bank overdraft fees cost consumers over $15 billion annually. Around 18% of account holders pay 3 or more overdraft fees a year, and half of that group pays 10 or more fees per year. And breaking that down, what you have here is that $15 billion from mostly poor people are being funneled into banks. So banks then can use that money to hand out loans to more wealthy people, and the cycle of poverty continues. This is just another example of where people who are in low economic situations have to pay higher fees and more money and are taken advantage of through their economic systems. It costs too much to be poor, and that is true across the board, and these overdraft fees are just another example of that. But when you look at the statistics that 18% of account holders pay overdraft fees at least 3 times a year, that's $105 a year. And for people getting 10 or more, that's $350 a year. And to put that into perspective, that's more than a minimum wage check. Just putting that in perspective, a weekly minimum wage check will be less than the overdraft fees that a person might pay in a year. So they're essentially being robbed out of a single week's payment every year for having to deal with these fees. And as I'm going to show, it's not always just a matter of personal responsibility like a lot of conservatives like to talk about. In fact, you get situations like this one where a person just simply makes a mistake. Like many Americans, I've overdrawn my checking account before. Recently, my husband forgot to transfer money to our shared checking account to pay rent. When our landlord attempted to process the check, our account was overdrawn and we got hit with a $34 overdraft fee. But it didn't stop there. My landlord was also hit with a non-sufficient funds fee for trying to process a bounced check when she then passed on to us. And that will happen very often. If you fail to make a payment, you'll end up getting charged double. And the truth of the matter is even if you have the overdraft protection, sometimes the bank will still charge you or block a check that you tried to put out there, and you'll get charged for the overdraft. You'll get charged for your own personal, fees for that, in addition to having to pay for the bounce check. And the bounce check fees again go both ways. So now instead of paying, just $70 if you didn't have overdraft protection, they ended up paying $104 for this situation. Now, none of this should have happened, and theoretically, it's just a mistake, but it's a very costly mistake. It's a fine for not having enough money in your bank account. And given the fact that poor people already struggle to pay this situation, a fine is really going to make things worse. Someone wealthier can afford this kind of mistake, maybe not someone who's poorer. Now, they have also shown that across the board from a 2014 study that the majority of overdraft fees are actually below $24, which gives even more credence to the idea that it is essentially an exorbitant loan. Because anytime that fee is below the $34 or $35 that you'll be paying to a bank, it is over 100%. It is 100% or higher in terms of interest rates. And to put that into perspective, credit cards, at least as of lately, this might not be 100%, but historically they were up to like 25% at their worst, 25 to 30% at their worst. And I think there's been legislation since to push them down a little bit into the 18% range. It has been a while since I researched that, and it's something worth talking about in the future. But that's the kind of range you're dealing with credit cards. This is 100% for most people. Every single time they mess up, every single time they make a mistake. And sometimes it's not a mistake. Sometimes it's the bank purposefully shuffling funds in a way that hurts people. So it's not difficult to imagine a situation where you get paid, say, on a Friday. And if you were to receive that payment and it were properly put into your bank account, you would have enough money to pay your bill on Saturday. So you assume, hey, you know what? I got the payment on Friday. I can go out and I can go buy groceries on Saturday. Now, you go buy groceries, you pay that, your heating bill, you pay whatever bill you have to pay, you pay your rent, and you do this with the assumption that the bank has your best interest in heart and you've got your money in there. But you don't, because the bank decides that it's not going to funnel your money in until maybe on Monday. But it's going to take your payment out on Saturday. Guess what? You've just incurred an overdraft fee for every single one of those situations. And with the story I'm about to read, it's quite a similar situation. Some banks reorder transactions to hit you with multiple overdraft fees. Imagine that you only have $100 left in your account and you make a series of purchases on one day. $5, $75, $20, and then finally $100. Now this total purchase is $200. You've spent $5 and then $75, totaling $80. You were responsible, and 80 went with 20, and you hit 100. You cut your account off, but then you had to make another $100 purchase, right? Not unreasonable, and you know that the bank is there or whatever reason, and you do it. Maybe you forget, maybe any number of other reasons, but you spend this extra $100. Instead of being charged with one overdraft fee for that last $100, the bank can reorder the transactions to process the biggest one first instead of doing them chronologically. If the bank does this, the final $100 charge first, then the $5, $75, and $20 fees will then give you 3 separate overdraft fees. Meaning instead of getting hit with a $35 fee, you're now getting hit with $105 in fees. simply because you made 4 transactions on that day and you may have been responsible with the first 3 but screwed up the last. The bank can reorder things. And this happens to a lot of people where the payment coming in and the money going out don't always match up, and the bank account might dip into the negatives very briefly, only to have it, fixed within an hour or two, and you'll still get charged a fee for that. And that is really frustrating for someone living on the edge like that, and someone living near that poverty line of having $0 in your bank account. To have the bank literally mess with your money like that. If the money's good and it's coming in and you know it's coming in, you shouldn't really be penalized for that. Furthermore, if you don't spend it in a irresponsible way and maybe you have one chronological error, you shouldn't be hit with 3 fees at once. So there are a few options within the banking system that one can do. First and foremost, if you have the capacity, call your bank and opt out of an overdraft protection. There was a law passed in 2010 during the Obama administration that allowed for overdraft fees to be opted out of. They are not helpful, as we've shown. You still might get bounced checks even in that situation. And yes, you'll be denied the purchase that you need to make in that moment. But sometimes it's better that than having to incur a $35 fee. Use it at your discretion. You can turn it on and off as you go. But generally speaking, I think it's a better decision to have the overdraft fees turned off. And the funny thing is that 52% of Americans don't even remember signing up for overdraft protection. It's kind of something that's just thrown into bank accounts. And if you made your bank account before 2010, it's probably automatically added. And by opting out, you'll be able to be declined on debit card payments and ATM withdrawals if they exceed their balance, rather than being charged this fee. So it might create an inconvenient situation at times, but that might be better than you not being charged that $35. Furthermore, you can sign up with most bank accounts for a low balance alert. Now, what this essentially does is it will allow you to have a notification go to your phone or whatever you're able to use, an email, to tell you, hey, your bank account is hit this amount. And that can tell you to be more careful moving forward. And outside of specific budget planning, that is a good alternative to people who might be struggling and might be shifting funds from here to there and everywhere else. So, those are potential systems, potential ways you can opt out of it and, maybe regulate yourself. You can also, if it's a one-time thing, call up the bank. There are plenty of moments where banks will, especially if it's the first time it's happening, will be willing to waive an overdraft fee. Now that requires time, that requires energy, that requires you to get over certain anxieties that phone calls might give you, or any number of other things that might be preventing you from doing so. But sometimes that $35 can make a huge difference in a person's life. That's a significant amount of food, if you spend it right. And so it would probably be in your best interest to try to find a way to contact your bank and say, hey, I got this overdraft fee, and just be polite with the person on the phone. Try to be as respectful as possible, and chances are they'll let that fee slide, at least for the first time or two. If it's a consistent thing, they're probably not going to do it, and they know people aren't going to call, and that's why they're willing to get away with it, especially if you're someone maybe working 2 jobs or, again, don't have the time or energy to do it. And they'll just get away with nickel and diming you, or in this case, $35ing you into oblivion and keeping you poor. So, with all of that said, one of the other things that is proposed is to try to create some sort of financial literacy, and that requires paying for or getting access to a program that can often not be helpful to an individual with a lot of the circumstances I talked about. There are some calls for this being put into the education system, but one alternative that a lot of people have used is check cashing. Now, on the surface, there's a lot of people who call check cashing sleazy and predatory and abusive. And so this article from the New Yorkers, I just want to read this paragraph. Researchers and the media tend to use words like sleazy, predatory, and abusive to describe check cashers and payday lenders. Yet banks are seldom described in similar terms. And they should be. And I completely agree with that. The people who populate the unbanked and underbanked categories are often making a clear choice to use check cashers and payday lenders instead of or in addition to a bank. Not a single person I interviewed expressed a desire to be more banked. There's another reason, as important as the high cost of traditional banking, that poor people eschew banks. And as this person's written, check cashing customers trust their neighborhood check cashers more than they do the banks. These customers appreciate the level of service they receive, which they feel is absent in banks. And this is important because the people who are, generally speaking, going to make that decision are the people who are disproportionately affected by banks, which tend to be younger, lower income, and non-white account holders. Which means in communities of color across the board, you are more likely to see check cashing. As a matter of fact, 9.6 million US households manage their finances without bank accounts. That's 7% of all Americans, but it represents 18.7% of families earning under $30,000 a year, compared to only 1.1% of families earning over $50,000 a year. 18% of African Americans are unbanked, compared to only 3% of whites. And then it goes over this story with this woman who experiences quite this issue with overdraft fees when she had a bank account and occurred over $800 in fees because of that situation. So she cashes her paycheck, pays her utility bill, and purchases a money order for her rent at the check casher. Then loads the remaining cash onto her prepaid debit card. Most of these transactions require a fee between $1 and $5. Small amounts, but they do add up. Every so often, if she runs short towards the end of the month, the check casher, Alex, will give her an advance from his own pocket, which he'll take from the next check that this person at the beginning of the month receives. And see, that's the kind of neighborly thing that a check casher might provide that a lot of other institutions don't. Oftentimes there's a situation where you're borrowing from family members or you're borrowing from the different people in your community, and they don't charge loans on that. So you might be willing to pay the $1 or $5 fee here and there when you actually have to put out a check, or you actually have to, load up a card, or you might have to pay your rent or have your check cashed, in exchange for not having to deal with these very predatory practices, where you can have 3 or 4 fees hit you at once. And there is a financial incentive there for people who are extremely poor. And again, this disproportionately affects people of color and people who are just young or living paycheck to paycheck across the board. So when we examine all of this and we look at all of these details, what is the disadvantage of not banking? Well, the disadvantage is that you don't have a record of your spending. There's no FDIC protection, so the federal government is not going to insure your money. You're often keeping your money in your house, and if you're robbed, your home catches fire, or anything else happens that makes your money disappear, that's not there. An advantage is, though, is you're often paying with cash or with a prepaid card that gives you a balance at the end of your purchases, which means you're able to track your money a lot easier, not having to go through specific financial institutions. Now, for me personally, I'd like to see a system put into place where if you are below a certain level of poverty, a certain amount of cash or assets, that you're somehow given a special type of protected bank account that makes these fees obsolete. We need, at the very least, legislature to push these fees away. And I don't think sitting down and blaming individuals for the tactics of banks in these particular instances is appropriate. I don't think just funneling money into education about how banks work is enough when the banks are making $15 billion a year in that money. I think, in fact, we should be, taking some of that $15 billion and funneling a financial institution that allows for poor people to be able to maintain their money in a situation that could allow for savings, for tracking, for all the downsides of not having a bank account with none of the bank account fees, and not penalizing people for these situations. Because across the board, this is predatory. And this is not the only way that banks are predatory towards poor people, but it's one of the main ways in which they do it under the radar. Not a lot of politicians are talking about this. Not a lot of people even know this is happening. And so I think it's worth talking about, addressing, and trying to come up with maybe some mutual aid or dual power structures to address this. I wonder on some level if credit unions function in quite the same way. And if there's a way to make it so that as long as you pay back the loan or the negative amount within a certain amount of time, that it would automatically be dealt with and you wouldn't have to deal with an overdraft fee and have this federally protected or mandated in some sort of way. Or we could create alternative institutions to provide that service so that people don't have to pay fees and they don't have to do all these things. Because across the board, it seems like for a majority of people, the check casher is actually doing a greater service than the banks. But that often leaves poor people the inability to ever get out of poverty. So with that said, if you like this video, give it a thumbs up, hit the subscribe button and bell for notifications. You can follow me on Twitter. Check out my Discord in the description down below. My name is Anarchist Tara, and I hope you enjoyed watching.